cryptocurrency trading, mastering scalp trading strategies, buying wealth education. In this video, I'll run through a few examples on how to use Fibonacci with your short-term charts. This is a 5-minute Ethereum chart. You can see that we've seen a pretty significant bounce here. So, but once you see something like this and you see the market take off, it's clear something's going on. You see a lot of volume there. That tells you there's probably going to be some follow-through. So you take your swing low, the lowest point, and swing high, and you're waiting to get in. Well, notice right here at the 38.2% fib, there was a certain amount of support. Probably worth pointing out, this is an area that's been supportive in the past, and therefore it does make a little bit of sense that this works out. So the question is, when do you get involved? Well, you can either get involved right away. Some traders will just simply take every fib trade that shows up. But notice this volume here on this breakout. So not only did 38.2 offer support here at about 1825, the market really took off with volume. So on a trade like this, once the volume picks up, it's clear that if you were to turn around and break down below this level, that's your stop loss. Now, the question then becomes, where do you aim for? Well, you start looking at the chart at areas that could be of interest. And notice we sold off right there, so you would expect to see resistance. And that's exactly where we hit. So that's a pretty straightforward trade. Let's take a look at Cardano. Same time frame. This is a 5-minute chart. Now, when you look at this chart, you can see just how choppy it is. Now, keep in mind, some coins are going to be a little thinner than others. So, for example, Cardano does not have, some of the volume that like a Bitcoin or Ethereum would have. But having said that, you could take the swing high to the swing low. And notice at 38.2, we fell again. There's a couple different ways you could have approached this. You could have said, okay, there's a nice volume spike there, and then we're falling. So that shows lack of follow through. So a stop loss above that area makes a certain amount of sense. You could say a really short scalp down to here. So, half a cent or whatever. You could also look to this area here. As it was previous resistance, it should be support, and it was for a little while. Or you could look down to here. Now, all of those would have been hit. So most of the time, in a situation like this, the smart thing to do is once you get past this area, move the stop loss to break even. Once you get down below this area, move your stop loss down to this line. Once you break down below this line, you're aiming for this, your stop loss goes above here, and you just let it rip. There's a million different ways you can do it, so I don't want you to get too hung up on it, other than I want you to start thinking about these support and resistance levels as places where you can tuck your stop loss behind or your target at. That is a very personal decision when it comes to stop loss placement. It has a lot to do with psychology more than anything else. And then you want to keep a statistical record book of what works and what doesn't. So here's another situation where we pulled back rather drastically. And in this case, we pulled back to about 61.8 and rallied. So you can see that could have been a decent trade. When the volume picks up, it really becomes interesting. But for that matter, you can also, go ahead and remove this. You can see there's a lot of volume spike right there. So you have this move. Now notice the market tried to break through here and it failed. And then it took off and you're thinking, okay, well, I want to be involved. It pulls back to the 38.2, volume picks up and you see these big moves. Well, where could you go? You could aim for the highs. That's exactly what we hit. Stop loss, a lot of times in this situation, if you're getting involved here, you either put it right below there, or another thing that can be done is people will put it behind the fib underneath it. So in this case, you would have had to risk about 3 cents and you're targeting 10. So that is exactly what traders should be doing. They should be aiming for a lot more than they're risking. So you can see how simple this is, but you really want it to most of the time you're going to want it to kind of align with support and resistance previously. That way you have both Fibonacci traders and just simple support and resistance traders involved at the same spot. In the next video, we'll start to take a look at exponential moving averages.